welcome. Thanks for joining us again for another exciting episode here for the Breakthrough REI podcast. As usual, I am joined by Mr. Sandy McKay. How are you?
Fantastic, and pumped for another show.
Me too. I can't wait to get into this one. First, everyone should go over to our website, breakthroughreipodcast.ca. Go look back and see what we've been doing for the past couple of years here with the podcast and revisit some of the old shows. You can go right back to the beginning, listen to every single one of them. And we've had some incredible guests that we've spoken to about everything REI for quite some time now. So everything's there on the website. You can also get our free gift.
Yeah, which I'm sure everyone knows, the ultimate strategy to build wealth through real estate. So pick that up. You never miss out on an episode. Get updates on everything we're doing when you do that. And so, yeah, go pick that up and never miss out on anything Rob and I are up to.
Sandy, you did an Airbnb webinar not too long ago. Is that right? A couple of days ago?
As of this, it's a week away still, but it'll be a little bit ago. Yes. When this airs. So, somewhere, if they want to reach out to me about that, they could pick that up. We had some great guests on our recent episode about Airbnbs, so that's maybe a hot topic right now. If people are interested in that, they can certainly reach out, and I can shoot them out the recording. Or if you're on our list, you might have already got that recording. So another reason to jump on there. And
you'll be doing many more of these type of things. Maybe it's not Airbnb, but different topics.
Yeah, we're doing a few more of those webinar styles, so good chance to engage and ask questions and stuff for those that are interested.
We'd really like to get back into some in-person investor tours in Peterborough area. So hopefully we'll be doing that soon. We'll have some more updates on that coming up. And then for now, of course, we've got the November in conjunction with Durham REI. We've got the November Costa Rica property tour coming up. So more information on that as we go. I think it'll be booked up pretty quickly with just Durham REI members, but maybe if it's successful, we'll start doing some more.
Oh, I'm sure. They have the dates locked in for that yet?
18th, 19th, 20th, and then depart on the 21st of November.
Awesome.
It's going to be fun. There's all kinds of activities and all kinds of great properties to see here. So we're excited about it too. And stay tuned for more information on that. And before we skip off this, I should just mention that everyone should go over to iTunes and leave us a rating and review as well. Helps the show get out there to as many people as possible that might enjoy this kind of information.
Absolutely. Go do that. And it allows us to get more great guests, great episodes. And certainly always appreciate that. And also people, reaching out and telling us what you want to hear too, right? Because we've done a lot of episodes. We've talked about a lot of different things. The world's always changing. There's always new things to learn and talk on. So let us know what you want to hear. And if there's a specific location maybe we haven't talked about, or a strategy or investment topic, then certainly let us know, and we'll do our best to get the expert on there, the Canadian expert on that, and bring them on.
Yeah, absolutely. All right, well, enough of this chit chat. Let's get into our interview. We've got some great guests today.
Fantastic. We've got Evan Ungar and Jordan King here standing by here from Tuck Capital, and we're pumped to have them on the show. Welcome, guys.
Hey, thanks for having us.
Yeah, thanks for having us, guys.
Yeah, appreciate you taking the time.
So these two have been investing in real estate for 4+ years. They got 15+ million in holdings and transacted over 65 units. A lot of action there in not too long of a time frame. So they're certainly active real estate investors, and they're also Evan's also an author, investor, public speaker, and also a Guinness World Record holder. So we're going to find out what that means a little more into the show here. And welcome, guys. We're pumped to have you here.
Thank you. We're like I said, we're very excited to be here and chat with you guys and answer some great questions.
Yeah, thanks. So let's get started with just, tell us a little bit about yourselves, both of you, and how you got started in real estate investing.
Yeah, Jordan, why don't you kick it off?
Okay.
Yeah, so Evan and myself, we've known each other for quite a few years, probably a little over a decade now. And we originally got started with Tuck Capital, and Tuck Capital was meant to be a business broker. Okay. So we were kind of connected to a lot of high net worth individuals that are looking to invest money, as well as finding projects out there that needed capital and needed the financing. So one of the projects we came across was a real estate investor company, and we started doing private loans with them. And then after doing that for a little bit, we said, okay, well, if these guys are willing to be paying 10, 12% interest, how much money are they actually making? So, me and Evan kind of spoke about it and said, hey, you know what? Instead of just like sourcing money for this, let's actually be the money guys for this and talk about getting a potential joint venture. So we started off doing a joint venture. The corporation was primarily focused on like dilapidated properties, bringing them up to market values, refinancing them, and then renting them out. The burst strategy, which I'm sure most people know about. If you don't, it's buy, rent, refinance, and so on and so forth. So that being said, after doing that for about a year or so, Evan and myself realized, hey, you know what? Like, this is really cool. And this is something that we think we want to be, do more of and have a little bit more control. So we decided to open up Tuck Developments, which is our real estate holding side, which is different than Tuck Capital, the brokering side. And we just went off to the races. We started finding some properties. We put together a construction company to kind of deal with all the properties that we have. And from then, we've just been scaling rather aggressively.
Very good, very good. Evan, let's hear, maybe a little bit about yourself too, and then because I guess that was sort of a sum up of where you guys are at right now, but let's take a step back. Let's start at the beginning.
Yeah, so I don't know where to start, but that was a great summary, Jordan. I would say a bit about myself. Yeah, just got into business with Jordan many years ago and just fell in love with real estate, really. We both bought our first primary residences when we were really young and saw what the potential is and how it did in the market on its own, and said, yeah, this is just an absolute beast when it comes to generating wealth. So decided that this is going to be something we're going to take hold and grow and use in a multitude of ways. So jumped in there. A bit about me, other than business, love to travel. Currently traveling quite a bit. Love the creative side of financing and real estate, and that's kind of where Jordan and I started hitting it off the most. And as you guys mentioned, I'm an author. I have a goal-setting book, how to plan your goals, how to go from goal setting to goal getting. So it's that actionable items from taking a goal that's just a thought in the head and a dream and really putting that down on paper and in writing and getting to it. And then, Guinness World Record holder, worked in athletics for most of my life in the gym industry, and somehow got into a competition with a coworker for everything. The egos in the gyms were big, and we used to, who could bench more, who could squat more. And apparently one day we decided to see who could jump higher, and it was me. And by the time we were done jumping, I had a bit of a crowd there. So we ended up Googling, what's the highest jump? And I had, made a decision that day I was going to beat the world record for it. So I trained for about a year and then broke the Guinness World Record for the highest standing jump. And then a year later broke another Guinness World Record for the highest jump on one leg. So quite a bit of fun.
Those are pretty impressive. Categories, I think. So I was waiting for like the, something really, really obscure, like, jumping off of one leg, landing on your toes or something that's like totally out there.
Right.
Those are pretty.
Yeah, this
good.
was like a record that had already been there. And had some fun breaking it. Got a really wicked crowd out at the gym, One Health Clubs that I was working at the time, out of Oakville and Mississauga there. So, it was a lot of fun. Yeah, we've had definitely some hard training and some good things. Then I've traveled the world jumping. Like literally, it's taken me all over the world on different shows and stuff. So it's been quite entertaining.
Super cool. What maybe we'll touch a bit more on that as we go through the show here, but if on the investment side, where do you guys focus? Is it a specific area? You mentioned the burst strategy, which we certainly have talked quite a bit around that on the show. we'll dive a bit deeper on that. But what areas do you focus on? Is it anywhere specific, or is it all over the place?
So Southern Ontario was kind of where we started, and we're heading north. We've headed north over the past year and a half or so. When the prices of homes were a lot more affordable, we were focused mainly in like the St. Catharines, Hamilton area. We've ventured out of those areas. We're staying in those areas for our flips. A lot harder to make a burr happen in those areas just based on the price. So all over the Golden Horseshoe, and then a lot up north now, so St. Marie, Sudbury area.
And burr strategy, is that the go-to up there as well, or has it changed at all when you've gone to these different markets? Has it kept the same strategy, or how has that changed?
Yeah, definitely continued the burr strategy up north, and we've actually, for the first time, actually done a couple buy and holds. The deal was so good. We potentially burr that property without having to do the renovation side of things, which is actually mind-blowing and amazing all on its own. But so yeah, the same strategy that we've maintained. We did run into cash flow problems burring as we scaled aggressively. So at one point we decided we just want to grow really fast. So we started picking up a dozen units at a time, and that became very stressful from a cash flow perspective. So we ended up opening up another corporation to do our just do flipping out of, and that would provide the liquidity needed in order to scale the burr model. Because everyone thinks the burr model is so great. You burr every time, you recycle the same money. It's the best model if you're doing one property or two properties at a time. But when you're picking up a bunch of them, you need a lot of cash. So.
A lot of people, if they go into scale, learn that the hard way, or they learn it in some way, and reach, they get into some challenges. I mean, that was kind of the focus of our next question, anyways. Were some of these challenges they faced in growing, or in starting or growing. So that's a great one to start it off. Can you dive a little deeper on how you is that something you foresaw coming, or did you learn that kind of just, oh crap, we got to figure this out, and then how did you get through that? Because that's a challenging moment.
Yeah, so we definitely learned that as we were going. Jordan and I are very tunnel visioned people in a good way. We set our eyes on a goal, we sprint at it, and we're very good at executing plans. And so we had this plan of scaling and growing and burring, and then we started coming. Our deal flow picked up incredibly well. Our funnel, our deal funnel, filled up really well. We started picking up more and more, and then they were going great. And then at some point we were like, hey, we used up our renovation budget on down payments. So, what are we going to do here? And so we decided, okay, with the, last bit of bulk funds that we had of our money, we're going to pick up some properties that can provide instant liquidity. And so we did some flips, and then, kind of went from there. So that's how the problem came about very quickly, but was solved in the real estate bubble, which is kind of what I love. That there's going to be definitely roadblocks in investing and building that generational wealth in real estate, but there's so many creative and different avenues within just real estate on its own that it kind of lends to solving its own problems just through using different methods.
It does if you think that way. A lot of people don't think that way. They'd be like, man, we got ourselves into trouble. What are we going to do now? Let's get out of this trouble. Instead, you guys dove deeper into potential trouble to save yourself.
That's exactly how we do it.
Yeah.
Yeah, that's it. And we have a term where we say, oh my goodness, we're running into trouble. What do we do? Well, let's just get even bigger so it's not that big of an issue down the road. You know what I mean? So we've had a lot of success definitely in Southern Ontario, GTA markets. I would say now that we're still doing the burr model for sure. We have shifted our expectations a little bit though. So not so much more on the yearly appreciation because the market just going up, but now more so we're looking at as cash flow, right? And me and Evan always say we view real estate like stocks. Your stock can go up, your stock can go down. Essentially, unless you're selling, it doesn't mean anything. But what's really going to change things is your dividends, your cash flow payments. So that's what we're doing now. We're kind of repositioning our portfolio and looking for more properties that cash flow very healthy, opposed to just buying and renovating and just waiting for market appreciation. So that's a little bit of an adjustment we have to make.
So for you guys, after you've done the BRRRR model, you've basically essentially, you've refinanced it for pretty much probably as high as the bank will appraise it for, taking all that money back out. What's a healthy cash flow for you guys after something like that?
So are you looking for cap rate or like gross amount of cash flow?
Whatever info you want to share with us, man. We're looking for
Yeah,
all
so
of it.
like love to stay around the 6%. I think is a great place to be. 6% is kind of like that really middle ground. Up north, 8% is really attractive. You hit an absolute home run. You could be seeing 10%, cap rates, but like I said, you're going to be in potentially not as high quality neighborhoods the higher your cap rate goes in terms of cash flow. And then it lends to really not ever achieving that cash flow because you have more turnover. But I would say, yeah, like a 6% cap rate is a really healthy place for us to be. I think that's where we like to sit.
And that's very interesting. So are you in towns where that'll be the cap rate set for the area, or are you guys generally higher?
Set for the area, meaning that's
Like
what the bank will value it at?
Yeah, exactly.
No, the banks are going to be, so our holdings in Southern Ontario will be lower cap rate properties, like, in Hamilton and whatnot. You're going to see cap rates ranging, 3-4%, 4.5% upwards there. But as you go up north, then yeah, you're in the sixes and upwards as well. So
yeah. Very cool. I guess my point was just saying that you guys are able to find properties that the cap rate is actually higher than normal most of the time.
Yeah, trying, right? I mean, that really comes from building out that network and deal flow for sure, but also being willing to take on properties that aren't in A++ neighborhoods and that have bigger renovation needs, right? Like picking up a home that's quite dilapidated, being confident that we can take that renovation on and bring it back to where it needs to be. So yeah. you get, obviously, you'll have better margins on property that require more work.
Sweat equity.
Hell yeah.
Love it. Okay, so any other challenges that you can tell us about?
I think a challenge that we faced, which I love to preach to newer investors who are looking to go beyond the first few properties, is we learned in our novice, beginning years that once you exceed that place of you can't hold the debt in your own name anymore, you gotta fund other ways. And when you get into residential lending, but in a commercial manner, you're no longer really looking only at comps anymore. We have properties in Hamilton that are worth over $1 million, but we're not going to get lending on that 1 point whatever value, right? We're going to get lending based on its debt service ratio. And so I think it's important that people really pay attention to debt service ratios when they're scaling their business, because it's something that's often overlooked.
So that's interesting. So how does that shift work? How does the shift from having the bank look at it as a residential property to a commercial property?
So if you're portfolio lending, or if you're getting a business loan to blanket the mortgages on the properties, they're only looking at how much those properties can service the debt. So whereas if you're buying 1 or 2 properties and you're holding them in your name and you got a great job and you're basing it on your employment income, they're going to base it on similar concept as how much you can service the debt for those properties, but the value they'll give you is strictly based on your next door neighbor sold for $1 million, so yours is a bit smaller. Yours is worth $950,000, and that's how much we'll lend on. But when you go into commercial lending, even though it's for residential properties, they're going to say, well, what's your NOI? and how much debt can you service based on your NOI, and then that's actually the value of your property. So
so it's when you're shifting over to look at it as a portfolio loan instead of
anything outside of personal servicing. Yeah.
Okay. And just for the people listening, because like not many people are going to, be in that position. Where would you like, at what point would you start to go to the bank and look at things this way?
I would say that I would do it before you even start investing, to be honest with you. You always want to teach people the landmines where not to step, right? And I would say it depends on your goal. Start with what your goal is, right? If your goal is to acquire 2 properties and build those 2 properties and sit and be happy, and maybe acquire one every 5-10 years down the line, then I don't know if you really have to look at that for a very long time, if ever. But if your goal is to build a business out of real estate and build that generational wealth, then I think you need to sit down right away and look at it and start acquiring based on that, because that will give you a better understanding. And that way, if you need to fall back on it being refinanced on personal debt service, you can still do that, but at least you acquired something that can later be serviced based on its debt service.
Great advice. And I guess too, if you decide at a certain point, you start out one way and you start to look at things a different way, or your goals change, then you can always look at it from that point on. And speaking of the goal thing, before we move on past it, I meant to ask you again, what is the title of the book?
It's called Make the Decision.
Make the Decision. Got it. Okay. So everybody out there, go to Amazon, order it right now. It'll help you guys build your goals so you guys can get to where these guys are.
Love it.
How do you guys help other people invest?
I love that.
Jordan, take that one.
That's something that we definitely take pride and pleasure in doing. I guess it's our form of giving back, really. And we help from all stages. It could be a novice investor, someone looking to get their first home and, showing them the different financing options out there. That could be one aspect. Or someone just looking to, upgrade their home and get into a bigger property, and they might not be able to get it through traditional banking. So we might have to help out with like a private or different type of unconventional funding practices. So that's been definitely beneficial. We've taken it to the next step as well as, not just helping people that work with us, whether it's directly or indirectly by providing jobs and businesses. We like to coach, we like to teach. And it's something that we're going to start doing a lot more of. But I know I got a couple of people under my wing, and same with Evan. And, the one gentleman is 21 years old, and he just completed his 3rd flip, which is incredible to see, and just showing them that it is possible that these certain things can happen, right? But it's definitely something that we take a lot of pleasure in doing, for sure.
Sorry about that, guys. I was on pause. There's a bunch of construction going on next door here, and like they're running this really loud saw. So I keep putting myself on mute when I'm not talking.
If it makes you feel better, we can't hear the saw. Probably just you.
Well, okay.
Or we're just used to it, Evan. Or we're just used to hearing so much construction.
Yeah, fair enough.
Yeah. You guys just, yeah, exactly. So, no, that's cool that you guys are coaching people as well. But what about on the investment side? Are you guys working with investors?
So we work with Jordan and I are about our layers. This is what we call layers. So like we try and layer our business. I know that both of you do the same. You have businesses within your businesses. So we work with investors on both sides for private lending within our network. Obviously, when you're scaling, the more funds you can bring in, the faster you can scale. So we've brought in private lending. We're open to it. We also have helped other people place their money and helped other people get private lending. So both Jordan and myself are mortgage agents. And we take pride in helping people make the connections and get the lending that they need as well.
Cool. What has that evolved over the years? Like when you started, how did you first start financing some of your projects into now? How you go about doing that? Is that
Oh, man.
evolved?
Yeah, that's evolved a lot. So Jordan and I self-funded everything. We came like Jordan said, we started by funding someone else's, realizing the value in it, then getting into business with that person, and then eventually doing business on our own. And we wanted to work out all the kinks in the plan before bringing in any outside funds. So we self-funded, around $500,000 liquidity on our own. And then from there, as we were scaling, we started to slowly bring in private lenders, inner circle like investments and things like that to scale.
And did you have at the start when you say self-funded $500,000? Was that from your home? Was that your personal funds? Was that funds you've had for a long time? How did you? A lot of people just starting are going to be like $500,000. Well, that's nice for them. They had a lot of money. But how did you get that money at the start?
Like everything. Yeah.
Everywhere. We both had
we
both had our properties that had quite a lot of equity in the beginning. So we were able to pull from that in a form of like a HELOC, home equity line of credit. We both had high income earning jobs. So, we had a lot of cash. I used to do quite a lot of stuff in entertainment, live shows, promotions. So I had quite a little bit of money. So it was interesting because I went from the guy that keeps all of his money in the bank and just has it sit there to changing that full mentality to no. Like every one of my dollars are like little soldiers that are going out there fighting battles for me, making me more money. And once we understood that concept of your money needs to be working to make you money while you're sleeping, then it was just like, okay, you know what? Let's use our money. Let's get comfortable with it. And then once we're comfortable, then we're able to take on other investors and work with other people. And I think that's where we differ from a lot of people. A lot of people do it the other way. They want to start with other people's money, and if it works out, great. If it doesn't, oh well, it's not our money. But peace of mind to Evan and myself is extremely important. So that's why we said, no, you know what? We're going to use our own money first. We're going to really understand this business. We're going to build our systems. And once these things are in place, then we'll open up our doors to other investors, which started with, friends, family, people in our network, which has now grown tremendously into, working with much larger funds. And I can't get into too much details of it because it's kind of an ongoing thing, but it's a remarkable thing that we're looking at investing, 9 figures into the real estate market. So,
yeah, congratulations on that too, guys. That's awesome.
Thank you very, very much.
I was going to ask you one about you mentioned going into different cities, different towns, Northern Ontario, and some of the differences. One of the things that I was curious about is neighborhoods and how those, in a lot of Hamilton, for example, because use that as an example, which I know pretty well. There's neighborhoods that maybe people wouldn't love to go into, and at the same time, there's great investment opportunity in them. Those kind of like not A+ neighborhoods, but maybe C or D. You can still get really good tenants in these neighborhoods if you have a nice product. Is that the same in Sault Ste. Marie, for example, or one of the other smaller sort of communities up in Northern Ontario, or is it how does that outlook on the neighborhoods that you're investing in changed, or has that changed? Can you still go into the lower type neighborhoods and make them make a nice product and get a good tenant, or is that like you just don't go in those neighborhoods type of thing?
I think the question was worded perfectly. So I think that what I'm seeing up north is just a bit more magnified, let's say, than. I mean, it was Hamilton. It's Hamilton 10, 15 years ago.
Yes.
If you were in a bad neighborhood in Hamilton 15 years ago, you were in a bad neighborhood, right? And now, the bad neighborhood that would have been the worst in Hamilton is it's bad, but it's not the end of the world. So I think that if you're picking your cities properly, and you have a healthy mix of neighborhoods, that's how you kind of hedge your bets, right? So I'm not going to avoid any neighborhood per se. Actually, some of our absolute best performing properties came from the worst places in St. Catharines. And I know Jordan's shaking his head yes, because we picked up a steal in St. Catharines on literally the worst street in all of St. Catharines. And To date, performance-wise, burr-wise, that's one of the best burrs we've ever had. And it still performs beautifully to this day. So we don't shy away from it. You just need to know what kind of finishes you're putting in there and your expected maintenance costs and your turnover, and kind of go with it from there. If you have depending on what your goals are, if steady cash flow is your goal, just make sure you have a mix of consistent higher grade neighborhoods, let's say higher grade neighborhoods as well.
Yeah, it's not all of them.
Yeah, and to add to that, like Evan said, the value is really in finding, those C grade neighborhood areas, and then, a couple of years or a few years down the road, it turns into a B or it turns into an A. And Evan and myself,
Exactly.
we both grew up in Oakville, and we always said, hey, we want to, my parents bought their 4-bedroom home in Oakville 30 years ago for $200,000, right? That's not going to happen in Oakville in today's market. So something that we always took into account is, hey, we want to find that area that's not hot right now, but that's going to be hot in 2 years, 5 years, 10 years. And one of the ways we try and gauge and measure that is, investing in areas where the average cost of a detached home is under $500,000. What that does for us is quite a few things. Is especially for acquiring with privates, we're keeping our mortgage costs relatively low, because it's not like we're paying privates on, millions of dollars for one property, right? So that's one aspect. The other aspect too is a lot of builders don't really go into these areas until that average price of a detached home gets over that $500,000 to $600,000 mark. And once that happens, they start buying out lots and putting out new builds, or people start buying brand new detached homes right from the builder for $599 or $699. So how we kind of hedge ourselves is getting into those areas where we think that demand is going to be there. And if we get in and get these properties, let's say at $150,000 or even under $250,000, we know, okay, not only do we have room for appreciation from doing the construction, there's also going to be room in the future as builders come into these areas, as demand increases, as newer properties go up. So that's something that we use to really gauge which areas we are going into.
So let's talk specifically about the St. Catharines one that you brought up, because
This is my favorite.
Yeah, exactly. So, and you're saying it wasn't in the best neighborhood, but let's talk about the factors that have made it the best one. Is it just the fact that the area is turned over? Is it that you guys just destroyed on a renovation project and made it and I don't think that that's the answer, because obviously if you've got if the street is covered with drug addicts, doesn't matter if yours is the nicest one there. But I'm sure that plays a part. But what are the factors, I guess, that would make it the best one that you guys have?
Well, I'll start it off, and I'm sure Evan will add to it in a second. I have a term that I use, and it's don't reinvent the wheel, right? Someone's already doing it. Someone's already done that market research. There's things that you can look at in certain areas that will indicate, is this going to be a good area to invest in? And one of the gems that Evan and myself heard in a business meeting, I think years back, and it's stayed with us, is you want to go in areas where your big companies, like your Loblaws type companies, are buying properties in that area with the hopes of turning it into a grocery store, whether it's in 2, 5, or 10 years down the line. And this particular area, although it was the worst street in St. Catharines, I'm talking there was drug addicts everywhere, break-ins, gang activity and everything, Loblaws actually bought the bingo hall, which was across the street. So that gave us the indication, hey, something's going on here if Loblaws is going to kind of put that type of money into this area. So you're right, it wasn't just we completely crushed it on our renovations. It was more so just finding that gem and knowing what to look for to identify the areas which are going to have that increasing demand in the future.
Yeah, definitely. Go ahead.
Yeah, that's a really interesting point, because we've always sort of said on the show is that, one of the main things is sort of stay focused on an area so that it and you can identify the deals when they do come by. So, that's a good point there, is that if you're, in St. Catharines and you're oh, I have all these nice places and nice areas in St. Catharines, then this one comes along, you'll know right away, okay, that one we might be able to jump on because we know something that other people don't know.
Absolutely. Knowing your market is a huge home court advantage. No matter if that market is in your backyard or not, just knowing your market well. I'm going to veer off topic here because I'm definitely not going to remember this, but it has enabled that one fact that you just said there about knowing your market is it has enabled us to pick up deals for the sole fact that we knew the deal fit our formula and we're able to offer before anybody else could do their due diligence. So knowing your market, and when a home comes up that fits the mold and you know the area and what you're looking for, it allows you to get ahead of everybody else. Well, everybody else is going to be sitting back going, okay, well, I got to check this area. I got to check my due diligence. I got to see my numbers. I see the home come up. It's 2-bedroom or 3-bedroom, 2-bath, whatever it is. It's a detached home. It's in this neighborhood. This is the asking price. I know even if I have to remodel the entire thing down to the studs, I know my cost already. I know this property is going to fit the model. I'm coming in buying this even in the hottest market with no conditions, taking it up before anybody else can grab it, right? And so whoever's selling it is like, oh, this is great. I had it on. I put it up, or I sent it out 2 seconds ago and it's sold. So getting ahead of that curve by knowing your market is not only a confidence booster but a huge advange.
Yeah,
it's the same in almost every business, right? Speed of implementation, speed to lead, speed is a huge factor. And yeah, the more you know your market, the more, like you said, the more you're able to act fast. A huge advantage.
This actually was, I'll tie it right back in. This property that we picked up in St. Catharines, speed was a huge factor here. This gentleman put up this property on the market, got attention from investors out of Toronto very early, and I knew it fit the model. We pressured this guy to give us this deal. The story behind acquiring it is absolutely amazing, but basically knowing the market and how it would fit into our portfolio enabled us to pick up that property, and it's performed very well.
Do you want to share the story or?
Yeah, so I'll give you the quick version of it. The wholesaler put it out. Investors from Toronto jumped on the opportunity. I wanted the property. We owned property on that same street. It is, like we said, the worst street in St. Catharines. We were confident in knowing how it would perform and the numbers on the turnover of it. So I offered the guy a decent offer, but below what he was looking for. This is obviously like more than 2 years ago, so before everyone was doing crazy bidding wars. And he said, okay, no problem. It's yours, but I have these people coming out from Toronto and they've offered me more, so they're gonna come and see it. And I was like, nah, man, like this is like, I'm taking this property. I know how, like, I'm not letting anybody else take it. And he was like, okay, I'll send you the paperwork for it. And I was like, all right, great. Paperwork didn't come through. He told me that he originally had people coming in at 2 p.m. So I knew that. And when the paperwork didn't come through in the next hour, I was like, I know he's showing this place at 2 o'clock. Anyways, we had contractors in the area working on another couple properties of ours. And I actually sent my contractors to that property with like their clipboard and all their tools. And at 2 o'clock, they walked in with the people from Toronto and started measuring and saying, oh, Evan loves this place. He's so happy he got it. And blah, blah, blah. And the guy was like, holy. Anyways, long story short, it clearly annoyed the people from Toronto who ended up leaving, and we secured that property, and it's been a great property since.
Sabotage is your recommendation.
Listen, I'm not sabotaging anything. He got the money he was looking for. Everyone made out really well on that deal. But you got to be aggressive, and even nowadays more so than ever, you gotta think outside the box. You gotta chase what you want. And I mean, like, again, Sandy, like you said, it's the same thing in every business, right? Like, you gotta know what you're going for, and you gotta be aggressive in the pursuit of it.
Especially in this market where, it's obviously cooling a little bit, but when you got tons of offers coming in, you can't sit there and have an inspection. You can't sit there and say, oh, let me think about this. Like, no, so out of myself, we have all of our systems. So by the time a property is found, it goes through like Excel, it pumps up the numbers. So we can give it a green light, yes or no, literally within 20 minutes of seeing the property, if not less.
And the other thing too is nowadays with the wholesalers, they're doing the whole feeding frenzy. Let's look at offers in a week the same as the realtor.
Yes. Yeah, crazy.
So, yeah,
crazy. Crazy. I mean, we got a deal, a portfolio deal came across my desk, I would say less than 24 hours ago, and it's a large, it's over $12 million in real estate that someone's getting rid of. And Jordan and I ran the numbers very quickly. It fits the model. Location works well, and we're the first to the table with an offer, and we're hoping that that's gonna be what gets it there. So less than 24-hour turnaround on a large pickup like that, works for the people who are selling it, works for the seller side, everyone on the seller side, and will work for us if we can get our hands on it. So same concept.
Very, very good. Okay. Digging back into the goal setting stuff, let's talk a little bit about how people can do that. You wrote the book on it, so let's go into a little bit of details for people, because man, they need it. People need it. They'll stop at the first red light and just turn left instead of keeping going straight. Let's dig into what people should do to get some of these. Like, you guys have done really well. Like, other people want to know how they can do it too, and clear goals is always a good way to get there.
Clearly defined goals would be your first step. Like, knowing what you want is the biggest thing. A lot of people just think, I want to make money, and money is such an ambiguous term, and it means nothing. So how much money do you want to make? By when do you want to make it? How do you want to make it? So you do your who, what, where, when, why, how. You gotta have a really clearly defined goal, and you have to know what it looks like, your end goal. You got to be able to taste it. You got to be able to see it, feel it, smell it. What does it look like? Where are you when you're realizing this goal? What are you wearing? What do you smell? What do you see? All these things like bring that goal to reality. And then the next biggest step would be like your why. Why do you have this goal? So having a goal is great, but if you don't have a really, really deep rooted reason as to why you're going for that goal, you will stop at the first red light, or the second, or the third, or the 100th red light. Jordan and I have been in life-changing, stressful situations, and not once, but multiple times. And it's part of learning, it's part of growing, it's failing forward. But had we not had such important reasons in our lives and such clearly defined goals, it would have been very easy for either of us to throw in the towel and say, like, this is just too stressful. Like, I'm not interested in having this sleepless nights and the anxiety and the stress. So definitely the why is important.
Right. And that'll keep you moving, as well as being able to gauge where you're at that point where, you might be able to look at it and say, well, look what we've done so far now. Here was our goal. Now we're 3/4 of the way there. Are we going to give up now? We've made it 3/4 of the way, right?
Absolutely. And that's why we kind of encourage issues as early as possible in our businesses, because the quicker an issue comes up, the quicker we can fix it and correct it. It's not a matter of oh no, something's going to happen. What are we going to do? It's no, whatever's going to happen, we're going to get through it regardless. So we rather have that issue and explore it as early as possible so we can correct it. I think a lot of people are scared of failure, and they don't realize is, that fear of messing up and being perfect is what's really keeping you back from your goals, because in that process of doing is where the magic happens. That's what you really learn when you're hands-on and your money's on the line, and you have these bills to pay, and you have certain things like complaining and crying isn't going to fix the problem. As much as times where Evan and I had some pretty serious things going on where we wanted to just, put our head in our pillow and just scream, it's not going to fix anything. So us having that mindset of, hey, we have to fight through this and figure it out, in turn built our confidence. And now when things come across our desk, it's like, whatever, keep it going, let's go.
Yeah. See, I like to face those adversities through interviews with other people, though. That's the way I like to do it. and then learn from them, right?
Yeah, for sure. That definitely would be a great way to learn them, for sure. Having a podcast like yourselves and being able to learn these lessons from a variety of people absolutely would be a great way to do it.
But it's also networking with people that are doing the same thing And I
100%.
mean, and I'll tell them about the stuff that's gone wrong for me. They can tell me the stuff that's gone wrong for them. We can all learn from each other, right?
And that's the most
Absolutely.
important part, is the networking part of it. And I have this like term I always say, well, not just me, but like, there's multiple ways up a mountain, right? And if you were just thinking about climbing that mountain, but you actually don't take the steps to doing so, you're not going to find out what those ways are. You're not going to meet other people along that same journey who might have figured things out and say, hey, don't do it like this, do it like this. Or, hey, if you climb this way, you could actually do it, have, much more endurance, right? But that being said, I think, just having that mindset is really what shaped our vision. And, being able to scale as fast as we did, is we jumped right into it, and being on that path, doing it in the day in, the day out, we met a lot of people who were doing the same thing. So we were able to learn from their mistakes and learn from their success as well.
Yeah. And those mind-blowing pitfalls that you're talking about, from the beginning days, they probably don't look as daunting now. Yeah, obviously, if you had to face the same one again, it's much smaller than it was that first time.
Yeah, 100%. And even something that we're talking about now is like, looking back on it, it was big, but it wasn't like, they're not life changing. And we had a situation the other day that we were trying to figure out how it worked, and Jordan and I both voiced to each other, we're stressed. And then we said, did we make it through all the other stuff? It's like, yeah. Should we waste our time being stressed on this one or any of them? And we're like, you know what? No. And then we both slept great that night. And it was one of the first times I think that we both kind of just looked like, kind of spoke and said, like, let's just not even waste our time. What is stress? Let's just not waste our time. We're gonna get through it. Is it an issue? Yeah, it's an issue. Like, we'll figure it out. And we did, and we are, and we continue to do so.
Yeah, and that's the thing. It's like, we're not looking for the most perfect scenario, because that just doesn't exist. A lot of people are looking for that absolute perfect scenario where they put their money in, there's no issues, they make their money, and they could do that 100 times. We have to do the opposite. We're like, no, you know what? We want to face as many issues as possible, come up with these solutions, because we know no matter what, 5 years, 10 years, next week, next month, there's going to be issues we run into. So us freaking out about it isn't going to do anything, but us preparing ourselves for when these issues arise and how we deal with it is what's been the biggest game changer for us, for sure.
Right. And I think there was a time when people would talk about real estate investing and it would always be rah, nothing's ever gone wrong, right? Like that sort of, the realism that I think a lot of people are bringing to these conversations now is much more important. Obviously, it shows that you can get there, but I think we actually did an interview one time, Sandy, and I can't remember who it was, but, and I don't want to call them out, but I remember, we always have the question, what are some of the challenges you faced starting out? And I think we had somebody actually say, you know what, we haven't really run into any challenges yet. When we do,
that's how you know a big challenge is coming quickly.
Either that, or I don't know, they're delusional and they just don't look at challenges as challenges, and they're all just like, I don't know, maybe they don't look at it as a challenge, or they're lying, because there's always problems, there's always adversity to get through.
Listen, anyone who's renovated any house with contractors, especially older properties, like you're going to run into problems. There's always going to be problems. There's going to be, booking issues with contractors, getting them on time, especially now with like the demand is crazy. Everyone wants a contractor, and there's just not that many out there right now. And not just out there, you have to make sure you get a good contractor, right? Because when we have a rule of thumb, it's like we don't go for the most expensive quote and we don't go for the cheapest quote. We kind of want to be in the middle somewhere, right? But to kind of think that there's not going to be any challenges, I just don't think that's realistic at all. You're going to run into challenges. Like, it's part of the game.
Yeah, absolutely. Just focus on getting through it. Let's see. What are you guys' big plans for the future?
Take over the world. We expansion is our future. We really want to make a goddamn dent in the world, man. We want to expand aggressively. Our immediate goal is to break the $100 million mark of properties, and I think we're going to do that fairly well. and then double it and double it and double it until we've taken over. But I think we're in terms outside of just financial and portfolio goals. We want to get into different types of real estate markets. So we're also acquiring more apartment buildings now. We've played in the short-term rental game with Airbnb, and we've seen a lot of success with that. So we want to do more on the short-term rental side. And we've talked about also like destination investing as well. So like I know you guys are doing some of that as well in Costa Rica. So talking about picking up properties in different places of the world. My vision for leisure and pleasure is really Airbnb places in like the houses in the top places in the world. And then when I want to go there, I'm going to my own house. I want to go. I'm gonna go stay in Paris. I'm gonna go have coffee in Paris this weekend. I was like, okay, cool. I don't have a booking there, so I'm just gonna hang out. It's that type of mentality and freedom ultimately to kind of play in your own backyard, wherever that backyard may be. So.
Yeah, and to very just quickly add on that, for me, the last word you said, Evan, is exactly that, freedom, right? Like I got 2 young kids, and to be able to watch them grow and be at home and not have to physically be at the office every single day has been great, and I want to continue that, and that's something that I've gotten a little taste of, but I want to make sure that that's there for my kids so I can see them grow up, But yeah, freedom is definitely a motivator for us, like without question.
It's probably one of the best goals for sure.
Yeah. Just be able to do what you want to do whenever you want to do it. You're not constrained by any money or whatever barriers. If you want to do something, you do it. That to me is the real freedom, right? So
yeah, we don't get our days back.
Exactly.
That's right.
Yeah.
Exactly.
Yeah. Cool. That's exciting, guys. Are you it sounds like the scaling is to continue then. I think a lot of, some people, we've talked to a lot of people that in hindsight have looked back and said, I don't know if I should do that. Maybe I went too fast, and you've kind of gone through some of those hurdles already by the sounds of it. So go through some of those struggles, and if you want to keep going or you want to go, maybe not anymore.
We want to scale.
We're doing it again. We're putting ourselves into the fire again.
Yeah, we always want to scale. The best story and example I can give you, and it hasn't happened once, it's happened multiple times, and we tell this one often, is like, Jordan and I were like, all right, I think we've scaled a good amount. Let's stabilize everything before we continue to scale. And so we say, okay, you know what, for the next 4 months, we're not going to buy any property. Let's just hang out here at this level for a bit and go. And then, like 6 days later, I'm like, Jordan, I bought 2 more. I'm so sorry, man. Like they were the perfect deal. We had to take them. Let's keep going. And then, 2 turns into 6 and turns into 8. And so we have an addiction with being uncomfortable, and it's led to so much knowledge and experience. So I think we'll continue down that same path. I think if Jordan and I tried to sit still, we would lose our minds. So
yeah, it's funny. We're always striving to have that break where we don't have to do anything. There's not much crazy stuff happening, and the second we even have like a half a day of just quietness, it's like, okay, this feels weird. What's going on? Let's get back into the fire.
100%.
Cool. What's we ask everyone this, and there's already been a few of these nuggets throughout the show, but what's one that stands out for you, a piece of info or advice that's always stuck with you, and how's it helped you along the way?
I think for me, the biggest one was just changing my mindset. And 2 main things I can say to that is, A, you don't have to live in the city you're investing in. And, growing up where I did in Oakville, where the average cost of a detached home is like well over $1 million, it's hard to do that. It's hard to start a business. So opening our mindset to being able to buy properties in Sault Ste. Marie and St. Catharines and in different areas was a big hurdle to get over. The other one, as I touched on earlier in this show, is being comfortable spending money and having your money work for you. We've all heard the term, scared money doesn't make no money. But, that's a big one I could say, is being comfortable. And the best way you can get comfortable is having that knowledge. Don't look at it as like, oh my God, it's so expensive. Like, what am I going to do? Like, no. But if you have that knowledge, then, you're able to put it together, make sense of everything. And if you have to get certain loans or whatever from different people in your network, you're able to do it because you can successfully execute that particular project.
Yeah, I think having the confidence, just that you're saying, having the confidence just to know that you'll be able to find the answer, right? Even if you don't have it right now.
100%. And that's the thing. Like, there's been times where we're like, oh my God, how are we going to do this? And fast forward to there's like a time, I think a few months ago, where we had a lender pull out 2 weeks before closing an apartment building, $2.2 million in financing. We had a $60,000 deposit on the line. If we couldn't close, that would have got lost. And instead of freaking out, we just got to work, and within 2 weeks, we came up with that $2 million to close the property. So it was a remarkable thing. And once you do that, a couple times, then you kind of feel like there's nothing that could stop you. Like, there's no barriers that can stop you. So we're excited.
Awesome. What about you, Evan?
I think that for me, the biggest advice, the best advice I can give to people is no matter, aside from the goal setting advice, I think is systems and people. Even if you're buying one property or if you're buying 1,000 properties, your systems will determine how seamless and how stressed you are and how successful you are. So, I have a line I love, and it's, you're only as successful as you can duplicate your system. And so it's really important to find systems that duplicate and that can grow and scale with you. If you have to do everything every time, it's a lot of work. It's going to cause a lot of stress. So find the right systems, implement the right systems, create protocols, procedures, automations, and then put the right people in place to manage those systems, and your life is going to be absolutely fantastic. I mean, I'm here currently in Bali, and we had our Airbnb is operating. We have tenant turnover. We have cleaners going in. We have maintenance if it needs it. We have refill of all the supplies, and I see the messages come through, but we're not actively doing anything for it. The paychecks are coming from it, but we're not doing anything for it. So those systems are really important, and I would rely on those systems as much as possible, even with one home.
Yeah, otherwise you'll get caught up in the micro.
Yeah, it's the
you want
whirlwind,
freedom.
right?
You want freedom. You got to have systems. That's for sure.
That's exactly.
And just to add to that, like, there's so many times where, like, because I'm a very hands-on guy, and so is Evan, but we got to remind ourselves, yes, Jordan, we can both do this, but that's not the idea. We want to be able to put this into a system so we can scale this so it doesn't require us having to physically be there at that point in time, which has been huge for us.
Guys, I want to thank you for everything that you've shared with us today. Appreciate you coming on. And once again, what's the name of your book again?
It's called Make the Decision.
Okay, Make the Decision. Got it. We'll have that in the show notes. And as well, what's the best way to get in touch with you guys?
So you can visit us at our website at tuckcapital.com. You can find us on Instagram and Facebook as well. We're quite active on social media. Feel free to send us an email as well, Evan at Tuck Capital or Jordan at tuckcapital.com.
And Tuck Capital is just TUK.
That's right, tukcapital.com. Yep.
Got it. All right. Sandy, how can people get in touch with you?
Sandy at freedomreps.com would be the easiest way, or they can find me across social media and all, everywhere in that world as well.
Okay. And people can reach me at rob@mrbreakthrough.ca. Thanks for joining us, guys, and we'll see you next time.